Well, it was also a day of a massive market crash that we saw, both the Sensex and Nifty seeing huge losses. Sensex crashed over 1,400 odd points and in fact, the markets continuing to plunge for the fifth straight session today amid weak global cues. Nervous investors entered the pre-budget week low on confidence. There was also panic selling due to the uncertainty around the quantum of a rate hike by the US Fed, which also spooked the markets. Sensex nosedived to a low of 56,984 today. And this is largely because of this uncertainty that we're talking about. And at this point in time, remember, we're also just days away from the budget as well.
Seen such a scary market in a while to come. To say the least, that we've ended or exhausted all of our 2022 gains year to date. The fact that Nasdaq in itself has fallen about 12%. You've got Bitcoin, which is down 24 to 25% year to date. And the Nifty as well is down 0.5% on a year-to-date basis. Now, I don't know whether that's an indication, are we going to align ourselves with other asset classes and fall further? But today as well was quite a hefty fall. We were down 500 points intraday, just about defended that 17,100 level on the Nifty future, sub that level on Nifty spot. A dismal market breadth and a market which chose to ignore any and every good news. I mean, to think of it, ICICI Bank were perhaps the best Q3 earnings amidst large caps that you've seen so far. The market completely chose to ignore that, and ICICI Bank was a key loser, as were metals, as was Reliance Industries, which also the street reacted to this morning, but completely chose to ignore those numbers. Reliance was down 4.5%. Metals got clobbered. JSW Steel was down 6.5%, 6% cut coming in Tata Steel. In fact, there were only 6 names in the entire F&O listed universe which managed to shut shop in the green. Bandhan Bank, ONGC and Cipla, to name a few, were the only green winners in trade today. Dismal was the market breadth, with 195 stocks closing in the red. Astral Poly down 9.5%, Hindustan Copper down 9%, Z down 8.25%, Godrej Properties down 8%, JNFC down almost 8%. So it was really smacking of acute a sell-off. And to think of it, the US markets futures were actually indicative of a mild uptick. So it seemed like the selling is going to at least stall when it came to US equity markets, although Europe did start off at a weak note. But our markets have been the rank underperformers today amidst the rest of the global weakness.
All right, so how is all of this impacting the retail investor? Harsh Roongta, financial planner, is joining us on the phone line. Thank you so much, Harsh, for speaking to us. It has been several days now where we've been seeing the markets fall significantly. What is, at this point in time, the advice for people who are invested in the markets for the retail investor?
Well, as I said, equity investment, as I have always maintained, equity investment is for the long term, and short-term price movements, both upwards and downwards, should logically not make any difference to whatever it is that is your investment theory. So if you have bought shares for the long term and you continue to believe in them, then this is the time for you to probably increase your bet. Maybe change your asset allocation. I think falls or rises in market, and big falls and big rises could, be a good occasion to review your asset allocation, if at all. Even I believe that even asset allocation is not something that you should do too often. But if you think 4.5%, which appears to be large, taken together with what has happened in the earlier days, it could be a good occasion to check your equity allocation within your desired asset allocation and make the necessary adjustment.
Right, absolutely, Harsh. In fact, like you pointed out, this may be a time to reassess your asset allocation. But obviously, people must be scared at this time as well, given the fact that the way the fall has happened. What should be the guidelines or one needs to keep in mind to reassess one's portfolio right now?
So I think the best way to do this is to set the rules in advance, and that is how you can avoid this cycle of fear and greed. So even your rebalancing, those rules should be set in advance. You can have a periodic rebalance, and you can define a threshold over which you will do a rebalance. That if your asset allocation falls X percentage, let's say 20, falls or increases, 10 or 20% over what you desired it to be. Suppose you desired equity allocation to be 60% and it falls to 50%. Then will you change it? Those rules, if you decide in advance, it's a simple matter of working according to the rules rather than deciding with emotions, which inevitably will be prey to fear and greed.
All right, Roongta, thank you so much for joining us with your perspective.